Hey everybody, today is Friday the 17th of November, and we had another strong week for the markets. Some of the weaker groups, such as the biotechs, were up the most, up 8.5%. The Russell 2000, which has been a laggard all year with just a 2% gain, was up 5.5%, but we still saw broad gains across the board outside of oil and Bitcoin, which were down a little bit. So let's take a look at these charts and make some sense of it. Here's the S&P 500 on the left is the daily time frame. On the right is the 30-minute time frame. As you know, I always call the market innocent till proven guilty while we have a rising 5-day moving average on the intermediate term time frame. When we have a rising 5-day moving average, that simply means I am not looking to sell short. And not just the market, but that's my rule for individual stocks as well. And while I'm not selling short, I am aware that we are extended here. And a lot of people have been calling this a lockout rally. What that simply means is that if you've been waiting to buy the dip in here, you really have only had one opportunity when we saw that one little pullback, and then it rocketed higher. I suspect we're getting closer to maybe some kind of little flush, something like this, perhaps next week, and maybe it takes a little bit more time to recover, but you can't fight this momentum. While this is a possibility, it's right now not a call for that to happen. It's just something to be aware of to make you recognize that know where your stop is. It's just that simple. Whatever your definition of trend, whatever the definition of trend is for your time frame. For me, I look at this and I see these as higher lows. If we break these higher lows, then you've got to take the appropriate action to become more defensive below this level. It doesn't mean it's going to reverse. It simply means it's a level of interest to be aware that maybe you want to get more aggressive about locking in some gains. We can draw a trend line like this as well. Breaking a trend line does not mean it will reverse. It simply means the rate of ascent has slowed, and maybe that will lead to more of a continued time correction. For the week, though, we had this big move. This is the week to date anchored volume weighted average price, and this vertical line here is where we were where we closed 1 week ago today. So again, you can't fight this momentum. We're getting more extended, and extended is just a word to say we're up a lot. It doesn't mean it has to go down. The buyers are clearly in control here. These rallies come out of 3 months of downward momentum, and the short sellers getting a little bit complacent. As the market rallied out of here, they had to really chase it quickly or wait on the sidelines for a dip, and now they're not getting those dips. It's getting more and more painful, so they stick bids in, and those bids continue to support the market. One of these days, like I said, we're likely to get a pullback, and it might be violent in the near term, but I think that you have to look at this market still as innocent till proven guilty, and likely to continue through the end of the year with some minor setbacks, of course. So we've kind of broken this trend line in the NASDAQ. And again, that doesn't mean a reversal. The definition of trend is higher highs and higher lows. So we still have that pattern of higher highs and higher lows. That has not been interrupted. So there's no reason to sell short. People have been trying to. Someone said to me on Twitter yesterday, I think it was, saying, we're due for an island reversal, calling this the island, and an island reversal, you tend to look for a gap failure. So why not short and take a bet that that's going to happen? And my answer was, because I'm not here to bet. I'm here to trade with the odds. And the odds continue to be in our favor in the NASDAQ as well, with a rising 5-day moving average to the long side. Common sense says we're extended, so don't look to get invested all at once up here if you've missed it, but be patient. A pullback will come at some point. Maybe it's going to continue out to new all-time highs in the NASDAQ before that happens. And actually, all-time highs, let's just take a look at the monthly chart, occur up at, what is this price? I've kind of forgotten at this point. But that all-time high was at 408.71. So maybe we're going to continue to run for that level before we see a significant pullback and a lower risk opportunity for an entry. If you're trading the long side up here, or even the short side, if you're trading up in here and initiating positions, you can't be doing it on a weekly chart, a monthly chart. You've got to look at down at a 10-minute time frame, a 5-minute time frame. We saw one pullback this week where it looked like it was going to turn into something, but it caught a bid precisely at the week to date volume weighted average price. So be aware of those levels all of the time. The Russell 2000 is still just really kind of a broken market. As we know, we were calling for 2 weeks ago, we were looking for it when it was up in here, we were looking for a pullback to maybe make a right shoulder, and we got the pullback, but the right shoulder never formed. Instead, we saw this big gap up on Tuesday of this week, and then it continued to move higher, right into the zone where it was supposed to continue to and find supply. That is, this black line is the 200-day moving average, which is declining, and that blue thicker line, which is the year-to-date anchored VWAP. When we back this one up to a weekly time frame, we've still got a giant mess, and we're into this zone where we have the 20, 30, 40-week moving average. We have all this congestion from all this year and late, basically the last 5 quarters, 4.5 quarters, we've been this has been kind of the center point of this range. Now, as I pointed out in a video on Twitter, every time the Russell starts to rally a little bit, people start calling it, now it's going to take leadership. But if you go back and look at that Twitter chart that I had posted, I went back, I think it was 15 years, and there hasn't been a period for more than maybe a week or two where the Russell has outperformed the NASDAQ and the S&P 500. Go with the strength. Don't be looking for the laggard to catch up all the time. Go with the stronger markets, like the semiconductors, which found buyers, again, right at that year-to-date anchored VWAP several times. People say, hey, it found a bid at the 200-day moving average, and that's true, but it just happened to be it actually pulled back precisely to the year-to-date anchored VWAP, as it had done previously this year, while the 200-day moving average was so far away that it was insignificant earlier in the year. We're right on that uptrend line here for the semiconductors. It doesn't mean it's about to reverse, but we've been riding this trend, and maybe we're due for a little bit of something like this, and then perhaps a refresh that kind of just brings us back to a little bit of reality. So that would be welcome in my mind, because it would allow for better opportunities for low risk new money entries, where you could have confidence to take a larger position size and know that you have a reasonable stop nearby to protect yourself with. So your risk reward, in other words, is a lot stronger than in a market where we have this lockout rally that people have been just slowly getting squeezed on the short side, and longs have been chasing. The biotechs did break this little band of resistance finally. The first rally up through it, however, it it was quickly swatted down. That was right here, and now it rallied back up today. So we're showing a little bit of resilience in this biotech market, but when you look at it and say prior support tends to act as resistance, and say where has it come from? It's just come from 64. Where does it have potential to go before it's likely to encounter a source of supply which might become resistance? Well, prior support tends to act as resistance, and then you say, is the risk worth the reward after it's gone from 64 to 73 with the potential for resistance up at 74? For me, the answer is no. I'm not interested in the biotechs. Maybe they continue to rally, and as I always say, it's more about probabilities than possibilities. Yes, it's possible that this market could do something like this, and if you're long, I'm happy for you. I'm not rooting against that, but for me, it's about, can I control my risk and get involved in a trend that's more likely to continue than reverse? And right now, the longer term, we've still got the declining 50 and 200-day moving average. That tells me money is still flowing out, and it probably needs time still to correct. Now, I've said kind of the same thing about the financials, that I wasn't interested in those, and that I thought we were going to see a shakeout down here. That didn't occur. Looking for a shakeout in weakness to then buy strength after is not the same as saying I'm shorting here. You don't want to short with a rising 5-day moving average. Just because I don't want to be a buyer does not mean I want to be a short seller. That's absolutely clear, because it's just stupid to short a market with a rallying 5-day moving average. And we came into this week right above that rising 5-day moving average, and it continued to move higher. If you're involved in here, be aware of this as a potential level of resistance. We've just came from 3150 to 3135, so maybe it comes through that a little bit and then begins to decline, and then a lower risk setup for an entry would be somewhere over here on the daily time frame. Again, not a prediction, but a potential scenario to say, how can we get involved in this if we've missed it? What's the better opportunity from a risk reward standpoint? Energy stocks have come up to, as we know, last week they broke down below this band of support, which was where we had seen the 200-day moving average and the year-to-date anchored VWAP, and they came up on Wednesday and again today, right up to the declining 20-day moving average, which is also at this prior support. So does it seem likely that it's going to be able to continue to move through here? It doesn't seem likely to me. Is it possible? Sure, of course. Maybe it does this and makes a run up towards this level. But when you look at crude oil itself, what's going on with crude oil? Crude oil is in a pretty good decline here. This is the anchored VWAP from the COVID low where it went negative. This is from the high just prior to that. And you can see that this zone in here is where we have the potential support, I think 67 to 70. So here we are right now at, what's the price right now? It's got that annoying clock in the way that I can't see it. 76 about, let's just call it. But that's where we are with oil. So why, with oil in a decline, would we expect the oil stocks to rally from here? It doesn't make sense. There's still a lot of good setups in the stocks individually. This week, STX has been a great one for us at Alphatrends. In that one from $72, in Dash from $88 per share. In this LZ, got out of a nice trade in Lululemon that we got involved in over here, and we were out of the final third right as it broke below this level. So there's still opportunities in the individual stocks, and alphatrends.net is really the only place I talk about that, except occasionally I throw some stocks on Twitter as well, such as Fubo today when it was $3 per share. So there's still a lot of opportunities out there. The key is to avoid chasing things. Always ask yourself, where has it come from? Has it expended a lot of energy getting to where it is? And where has it come from in relation to where it has the potential to go before supply is likely? And based on the answer to those two questions, is the risk worth the reward?